Ladies and gentlemen, good day and welcome to the Star Cement Q4 FY22 and FY22 conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Inba. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q4 FY22 and FY22 call of Star Cement. On the call, we have with us Mr. Tushar Bhajanka, who is a part of the promoter family and the next-gen promoter of Star Cement. He's also sharing the additional responsibility of being the Chief Strategy Officer and rather the CS of the company. Along with him, we have Mr. Manoj Agarwal, who is the Chief Financial Officer of the company. At this point of time, I hand over the floor to Mr. Tushar and Mr. Manoj Agarwal for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Okay, so good evening, everyone. My name is Tushar Bhajanka. I am one of the promoters in Star Cement. And as Vaibhav said, I'm also handy as a position at the moment. I would like to welcome you all to the earnings call of Quarter 4. I have Mr. Manoj Agarwal, who is the CFO of the company. He will take you to the Quarter 4 numbers and also the yearly numbers for FY22. After that, you will be able to ask questions, and we are happy to answer. So over to Manojji.
Yeah, hi friends. Very good evening. I, on behalf of Star Cement, welcome you all to our Concall for discussing our number of Q4 FY22 as well as the full year number of FY22. I would like to clarify that we are discussing on the historical numbers and there is no invitation to invest. Having said that now, I will just take you through the Q4 number followed by the full year number. Starting from the clinker production, during the quarter ended March 22, we have produced 6.71 lakh tons of clinker as against 6.30 lakh tons same quarter last year. So far as cement production is concerned, we have produced 11.59 lakh tons this quarter as against 8.99 lakh same quarter last year. Now I will take you through sales volume. During the quarter, we have sold 11.52 lakh ton of cement and almost no clinker, as against 9.01 lakh ton of cement and 0.05 lakh metric ton of clinker same quarter last year. This is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 8.14 lakh ton as against 7.46 lakh ton during same quarter last year. And as far as outside Northeast is concerned, we have sold 3.38 lakh ton of cement this quarter as against 1.55 lakh ton same quarter last year. In terms of blend mix, it is almost 12.5% of OPC and the rest is PPC. These are the quantitative number of the quarter. Now I will take you through the financial. The total revenue figure for this quarter is around 748 crore as against rupees 602 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of around rupees 122.55 crore as against rupees 112.70 crore last year. PAT is rupees 88.42 crore as against 85.29 crore in same period last year. On per ton EBITDA front, it is 1,063 during this quarter as against 1,242 per ton same quarter last year. This is what our quarterly number of fourth quarter. The total revenue figure for the full year ended March 22 is around 2,218.74 crore as against 1,718.61 crore same last financial year. As far as EBITDA figure is concerned, during FY22 we have done an EBITDA of around rupees 379 crore as against 361 crore last year. PAT is 247 crore as against 187 crore in last year. That is on account of the exchange extraordinary item last year of 64 crore. On per ton EBITDA front, it is 1112 during FY22 as against 1337 per ton in last FY21. These are quarterly and full year numbers. Now I request all of you that if you have any query, you can ask the same, and I will request Vaibhav to moderate the query wherever it requires. Thank you. Over to Vaibhav.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and one. We'll take the first question from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thank you, sir. Sir, first, just wanted to understand in terms of the demand for the fourth quarter in Northeast and East, and at the same time in terms of the capacity utilization for Siliguri plant, because last time it was around, you said 60% was there and 65% likely to be there in fourth quarter. So.
No, but just a bit correction, because last year we have sold up to last quarter it was around 30%, and we are sold that in the next quarter we will be achieving around 60% of the capacity utilization. So that we have already achieved in this last quarter. Okay.
So, I mean, the demand situation in Northeast and also the areas of outside Northeast that we serve has been good this quarter, and that of course reflects in our volumes as well. So we have done about 11.52 lakh tons in this quarter, which when we compare it to the last year same quarter, it was about 9.01. So definitely there is an uptick in the demand, and also for outside Northeast there has been an uptick in our dealer network as well. So these are the two reasons why our volumes have grown. As per the utilization of Siliguri, the plant has been utilized at about 65% capacity for the quarter 4, and we do expect similar trends going forward.
Okay, so in terms of the now Siliguri utilization is at 65%. So for the full year, what kind of number so broadly just trying to understand in terms of the volume that we are likely to have in FY23. So including the utilization in terms of the Northeast and East. So the volume growth most likely to come from the East. So just wanted your thought on that. And second is on the pricing.
So of course, I mean, the volume growth, I am very bullish about Northeast and also the areas in East that we serve. So the volume, utilization of Siliguri for the coming year would be about 60 to 65%. So that is what the utilization right now looks like. So it will of course definitely increase from the 22% that we had in FY22. And about the proportion of East to Northeast sales that we have. So I do expect the Northeast to also kind of show a similar growth in numbers. So I do not think that the proportion of Northeast sales to our total sales would be decreasing.
Okay, and in terms of the pricing, so about post March, how much price increase we have taken till now?
So the price increase has post March the price increase was of about 20 to 30 rupees in West Bengal and Bihar, and of about 10 to 15 rupees in Northeast.
Okay, and lastly, sir, on update on our expansion plan. So 3 MTPA clinker in Meghalaya and 2 MTPA in Guwahati. So last time we said that TOR has been received for both, and we were expecting clearances for that. So what's the status, and is there any change in terms of the overall capex that we were thinking 1800 crore? And so.
Yeah, so I think for the 3 million ton clinker plant, we have gotten most of the permissions, and I think we should be starting to we should start construction by next month. The date for the plant to be commissioned is by end of next calendar year, so December next year. We have already ordered machinery for the plant. We have ordered for most of the machinery for the plant, and also for the cement mill coming up in Guwahati. So, these two projects are going in mainstream. Also, we have now planned to get another grinding unit in Assam, in the southern part of Assam, South Assam. And, the details of that plant and the exact location and the market that it would cater will be addressed in the next quarterly call.
A grinding unit in Assam, so you said clinker likely to commission by December 23, and the grinding unit will also be by December 23?
Yes. So the Guwahati grinding unit and the clinker plant, they both would be about the same time. So it may be a month here and there, but they should be broadly coming in the same time. And the third plant that I was talking about, the grinding unit, that may take 2-3 extra months compared to these plants.
And so the new one, so related is new one would be also 1 or 2 million ton, or the details we will be sharing in the next quarter?
So it will be served in the next quarter, but the expectation is we're still deciding on we are still doing the market analysis, and so that's why we haven't chosen on that capacity number, but it would be about 1.5 to 2 million capacity.
So broadly, in terms of the capex now for this year and next year, so for existing ongoing, the expansion and the new broader range, how much are we likely to spend this year? So total capex, and for this plant, how much are we likely to spend?
So I mean, the total capex that we expect for that 3 million ton clinker plant and 2 grinding units of 2 million tons each would be about 2,000 crores. And approximately, I will have to take out the split, but approximately it is going to be around 50% of the capex each year. So in the next 2 years, it will be 1,000 and 1,000.
Okay. Thank you.
Thank you.
Thank you. Before we take a next question, we'd like to remind participants to ask a question. You may enter star and 1. Next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hello. Thank you for the opportunity. Sir, when I was seeing your balance sheet, I can see that your long-term other financial assets have increased from 6 crore to 123 crore in this year. So what exactly it is? Is it balanced with bank?
Yeah, because it is a more than 1 year all in fixed deposit. It is in a fixed deposit and bonds which is maturing more than 1 year.
Okay. Nothing apart from that, right?
Okay, thanks.
And, may I know what is the status of the clinker debottlenecking? Some time back we were planning for 0.2 million type of debottlenecking on clinker side. Is it on card?
Yeah, so I think we have worked on it. We do expect some we have worked on the some technical aspects in the plant, and we do expect earlier our clinker capacity was about 2.6 million tons. So we do expect that we can push it to about 2.7 million tons in this financial year. So we have made some changes, and we do expect like about 1 lakh ton more clinker to be produced due to those changes.
Okay. And what's the progress on the WHRS front?
Yes, so the WHRS project, there was some delay from the vendor side, but we have now taken care of that. The delay was mainly because of the increasing steel prices, so there was some request for revision of the contract. However, now, the plant should be coming in October this year.
Okay. And post that also we have WHRS for new plant also. And when will that commission?
So that will commission along with the plant end of next calendar year.
What is the progress on the environmental clearance for the new expansion?
Which one?
The Meghalaya expansion environmental clearance.
So we did have a meeting recently with the ministry, and I am very positive about getting the clearance in by the end of the month. So it should be with us. We of course had already got the public hearing cleared. So now it is with the ministry, but I think by the end of the month we should be having the good news.
Okay, that is great to hear. And one last question from my side. So how is the coal supply from Coal India now? And how should be the power and fuel cost in Q1?
Sorry, can you repeat the first part of your question?
Just want to get a sense about what should be the power and fuel cost in the Q1, and are we facing any supply issue from Coal India?
So I mean, there was some disruption because of the rake availability. There were some disruptions in coal, but we do maintain a healthy stock. So I don't think those disruptions are going to be passed on into our costs. And I do not think that we will face a very significant rise in our fuel prices going ahead. Of course, the IEX prices have been fluctuating. In the middle, they had gone to about 10 rupees. Now they come back to about 6. So that, of course, our grinding units have to face. But I don't think there's any increase in fuel costs or in the clinker plant. So I do think that in the next 1 or 2 quarters we should be not seeing any steep rise there.
Okay. So how many months of fuel inventory you have in hand right now?
So we have about like 1.5 months to 2 months stock right now.
Okay. Thank you. That's it from my side.
Thank you. Our next question is from the line of Raj Nahar from Millie Consultants and Investments. Please go ahead.
Yeah. Thank you. My question is about the coal. How are you managing to get the coal? Are you getting coal fully from Coal India, or are you importing the coal or petcoke?
So I mean, to answer that question, of course we are, we do have a very good FSA contract with Coal India. So most of our coal comes from Coal India. And then we have been able to substitute some of our power requirements and energy requirements to biomass. So that has also been, giving us some breathing space in the last 4-5 months. And so I think these are the two sources where we are basically getting our coal from. Yeah.
So this, how much percentage of biofuel you are using in power, and also are you using biofuel or any other waste material in your kiln?
So I mean, so we are substituting about 10% of our total energy requirements from biomass at the moment. We haven't started AFR in our kilns, but that is the project that we are now taking up, and I think in the next 6-7 months we should have a mechanism to kind of feed our kiln 5% of AFR. So we have been in touch with the municipal corporations around, and we have had some tie-ups with them. So I think in the next 6-7 months there should be a substitution to about 15% to 17% of our energy requirement should be coming from renewable or green sources.
Means you have installed the feeding system for the kiln also, or are you going to install?
No, so we have placed the order for the to be able to install. I think in the next 6 months we will be able to install the system, the AFR system. The system that we are installing is not a 15% substitution in the kiln. It is only 5%. The system is very basic. So in the next 6 months we plan to execute that and to set it up. And then, probably, from Q3 onwards, we would see that we have started substituting, even in a kiln, some AFR.
So there is, in this quarter or in the subsequent quarter, the price of fuel basically is likely to remain same unless Coal India increases.
Yeah, unless we face any shortage from Coal India on their agreements, I think the prices should be fairly, I mean, it may increase, but the increase will not be significant.
The last question is, what is your WHRS capacity for your existing plant, and what will be for your expansion?
So the WHR capacity that we're setting up at the moment is about 12.3 megawatt, and the one that we're going to come up with the new line is going to be about the same. I think it's going to be 11 to 12 megawatt.
Existing 11 megawatt and the expansion also 11 megawatt.
Existing is 12.3 megawatt.
Okay. So.
And the one which is coming up with the new line is going to be about 11 to 12. So I'm not very sure because we haven't logged the WHR as part of the project, but it is going to be about 11 to 12 megawatt.
And what will be the capacity of clinker from this plant?
So the current capacity that we have is about 2.6, which can be extended to about 2.7. And for the new plant, it will be 3 million tons.
The clinker capacity.
Clinker capacity, yes.
Okay. Thank you so much. All the best, sir.
Thank you. Thanks.
Thank you. Our next question is from the line of Uttam Kumar Semal from Axis Securities. Please go ahead.
Yeah, good evening, sir. Thanks for taking my question and congratulations on good set of numbers for the quarter as well as for the year also. So my question pertains to your capex plan. As you said that company will be incurring 1,000 crore of capex in next 2 years. So how do you wish to go for capex? So it will be you will be taking a debt for the capex in the next 2 years. If you can clarify on that.
So the capex that we plan for the next 2 years is about 2,000 crores. We have about 750 crores as cash reserves in the company at the moment, and we will, of course, and we do expect healthy cash inflows for the next 2 years. So we will of course have to take some debt, but just how the promoters are, we don't like to keep very long-term debts in the book. So I think that debt will be, in a 2-3 year horizon, we may have some debt, but we'll pay it off as soon as possible. So I don't think the debt situation would be something of a concern going forward.
So, sir, you can quantify the debt number if you can.
It will be maybe somewhere between 500 to 600 crore at a time, and then we'll be repaying maybe it can be repaid in 2-3 years.
So I think, we don't exactly have the numbers. It will be broadly about 500 to 650 crores about, because, it will take us, the capex outlay is not at once, it keeps on happening throughout the 2 years. So the expectation is that most of it will be paid by our own cash inflows that we expect in the next 1 or 2 years. And some amount of debt, about 600 crores, would be taken, which should be paid in the first year of commissioning of the plant.
Okay. And also some data points. What has been our trade and non-trade mix during this quarter?
So I think it's about the same as last quarter. It is about 14%. 85.
84 and 16.
84 and 16%. So 16% has been non-trade and 84 is trade.
Okay. And sir, what has been our lead distance during this quarter?
This quarter is total about this year it is 219 kilometers. Okay. And last quarter also it is around 222. So 3 years more or less same lead distance.
Okay. Okay, sir. That's all from my side and all the best to you. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Mangesh Bharang from Nirmal Bang. Please go ahead.
Good afternoon, sir, and thanks for taking my question and congrats on good set of numbers.
Thank you.
And also thanks for providing the separate details of rate and power in this release. So my question is on the overall demand scenario in Northeast. So if you look at our volumes, overall volumes, say even from 2015 all the way up to 2021, we had not seen so much of a growth despite having a very high market share in Northeast. And now we are adding, say, 3 million tons of clinker and almost 4 million tons of grinding, which would probably be more than 30% of the total demand in that region. So what gives us confidence that such a large capacity in the Northeast region should be able to ramp up or get utilized faster, and what kind of demand trends you are seeing which we are missing? So that's the first question.
Okay. So, I mean, we are very positive about the growth that we see in Northeast. In this year also the market has probably grown about 17%. But that may be true for other markets as well. But the kind of investment which is coming from the government at the moment, I think it's really going to drive up the aggregate demand around that area. So a lot of that growth story which is going to come out in the next 4-5 years or probably like the decade in Northeast would be the government intervention in that area and the infrastructure development which takes place. And of course, cement being a very critical element of that, we do see a direct increase in demand for cement. So I think this is probably the reason why what really motivates us to kind of put up a higher kiln. And the second reason to put up a 3 million ton versus a 2 million ton is the efficiencies that the a larger size gives us. So in terms of utilization, it may take us only 1 or 2 extra years to utilize the plant, but in terms of the cost savings that it gives, it is significant. So those elements were also considered while taking the decision. And the market that we are effective, so the target that we have right now is of course to focus in Northeast to grow in the trade market, but also the non-trade market. But at the same time, it is also to grow in the North Bengal market. It is also to grow in the in the East Bihar market. And the third reason why we are bullish. So first is of course the government expenditure in that area and the aggregate demand increasing. The second one is of course that we are also increasing the size, the geographical size of market that we are trying to capture. And the third one is there's no new capacity that we know of which is coming in that area. Because a lot of reasons why the earlier capacities had come up are not there anymore. Relating to the subsidies, of course. So so I do not expect that it will be really possible for some of these players to kind of expand. So that is also one reason that we think that we'll be able to do a justice to our utilization.
Okay, thanks for this answer, sir. So secondly, on your capex cost, because of the increase in various input costs like steel, what kind of cost inflation you have seen in your capex cost? You mentioned 2,000 crores for this setup. Does that factor in the increased prices, or you think that there could be some upside to this capex cost?
No, so I mean, of course, till now we have been able to lock most of the machinery for the clinker plant and the grinding unit. So we've already factored in that and signed the orders that we had to, and the number of 2,000 crores of course accounts for the orders that we've already made. So to say that yes, the 2,000 crores just factored in the costs which have increased, and it is the most revised number that we have.
Okay. And so one more question was regarding coal. So recently we heard that Northeastern coal fields, which is based out of Assam, a subsidiary of CIL, that has started production after some time. So just wanted to check if is it possible for us to benefit from it, or where we are purchasing coal right now, compared to that if we purchase it from Assam, whether it would be give any cost benefit to us.
So I mean, there are 2-3 things. One is, hello, can you hear me?
Yeah, I can hear.
Yeah, so I was just saying that one is of course the quality of coal. So the coal quality that comes from Assam has high sulfur, which becomes very hard for a clinker plant to operate on. The second is the volume. I don't think the northeastern coal fields have the Margarita mines do not have that kind of a volume, to supply to the size of cement industry which is there in Meghalaya. So I do not think, of course, we have explored and we can explore it further, but I do not think that anything very significant would come out from there because of the quality and also the volumes of it. So I think that's probably that.
Sure. Thanks a lot, sir.
Thank you.
That's it.
Thank you. Our next question is from the line of Parth Bhavsar from Investec. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, I just wanted to understand that what was the fuel mix during the quarter? Like how much was from coal and how much was from other sources?
Like I said, that we had substituted about 10% of biomass, so rest of it was coal.
Yes, coal. Okay. And so out of that 90, how much was how much did come from it? Came from Coal India?
So I think almost all of it was from there.
Okay. 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 So all of it came from Coal India. And on this purchase, what was the per kcal cost for the quarter?
So I think we have a long-term fuel agreement at about 1.35 rupees per GCV landed. So all the purchases that we made are basically falling around that price.
Okay. And so
we already told, because we had the stock also previous, and because we have purchased in auction, that the stock has started coming in during this quarter.
Okay.
So that is also one of the reasons. Okay.
And this would continue for another month or two, right? Like
another quarter.
For the quarter. Okay. Okay.
So I think the FSA contracts that we have are in place for 5 years, and it started last year, and the prices are fixed for 5 years. So this benefit we should be accruing in the years coming ahead as well.
Okay. 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 That's it from my side. Thank you, sir.
Thank you. Our next question is from the line of Mudit Agarwal from Motilal Oswal. Please go ahead. Mr. Mudit Agarwal, please go ahead with your question, sir.
Yeah. So, sir, my first question is related to the...
I'm sorry, sir, we can't hear you that well. Could you please use a handset?
Hello. Am I audible now?
Yes, thank you.
Yes, yes.
So my question is related to the flood kind of situation in the northeast states, like there's a heavy rains. So could you please put your highlights on how is the current situation of the demand in these markets?
So so that's a good question, I guess. Since a week there have been floods in northeast, and it has been more than the usual. Till a week back, the demand situation was good, but of course, because of so much flooding, the cement demand for this week has fallen. I do not think, it just really depends on how long the situation carries on. Right now, it is really actually just flooding. So of course, the cement demand would take a hit, but I think that, the forecast suggests that in a week's time, it should be all clear. So then we do expect the demand to pick. So I think in this week we have observed that the demand is going down. It will naturally go down if the state is covered with water. But I do expect that as soon as the flooding subdues, our demand should be back.
Okay. And the second question is related to the outstanding freight subsidy. So how much it is outstanding in both current and non-current, and how much we have received in the full year FY22?
Which subsidy you are talking about?
Freight.
Freight subsidy, hardly we have only 12 crore outstanding is there, because what is outstanding is there, we have received in April. We have 27 crore or we have received this in April month. So only outstanding is 12 crore or so in the freight subsidy account.
So can you repeat the number? Actually, I didn't hear that.
Because we have total outstanding around 37 crore. Okay, 25 crore we have already received in this April month or this fiscal year. So it is only, right now it is outstanding only 12 crore.
12 crore. Okay, understand, sir.
Mm-hmm.
Thank you so much. That's my...
Thank you. Before we take our next question, we would like to remind participants, if you wish to ask a question, you may press star and 1. Ladies and gentlemen, please note this is a final reminder to ask a question. We'll take a next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Sir, first, in terms of the other current assets, which has reduced from 326 odd crore in FY21 to 200 crore. So, what's the reason for that?
mainly because we have received our GST refund. We have received almost up to last quarter, we have received all the GST refund. So that is because the government has released a lot of funds. So all the GST refund receivable is getting cleared this year. So that is the reason that has come down around 100 crore. So that is the major reason for reduction in the other current assets.
Okay. Okay. Second, just wanted to clarify. Sir has mentioned that currently we are having a 750 odd crore cash level. So even if, as you previously mentioned, that 123 odd crore other financial asset is a fixed deposit. If I also include that, then the number comes at 670 odd crore. So will you please help me? So 750 odd crore.
As on March, it is around 670 crore. But now he's talking about the current position. But by April, by the April end, it is 750 more than 750 crore.
Okay, got it. And sir, you mentioned 219 lead distance for FY22 or for fourth quarter of FY22?
For the FY22 as a whole.
And for the fourth quarter, how much it was?
It is similar because in the up to last quarter it is 222. Now it has come down to 219. So you can this quarter it is maybe 218 or 217 kind of thing. This quarter.
Okay. So just wanted to know, despite our lead distance has remained or it has reduced by 2-4 kilometers, the freight cost has increased 4.5%. So last quarter in terms of the diesel hasn't moved much. So 4.5% increase in freight cost. Any specific reason? QOQ I'm talking about QOQ increase.
No, March, because the availability of the truck, because because entire Northeast we are moving maximum because more than 82% is by road only. So during the March closer, year closer, every truck availability is an issue. So every time it happens in the month of this Q4, March, the freight tendency is going to there is a tendency that the freight is getting increased.
Okay. And second, just to clarify, the upcoming grinding unit is 2 MTPA, clinker is 3 and grinding is 2 MTPA.
So the upcoming clinker plant is about 3 million tons, and the grinding unit is there are 2 grinding units coming up of 2 million tons each, approximately 2 million tons each. One would be one is definitely 2 million tons, the other one maybe 1.5 to 2 million.
Okay, the second one you are talking 1.5 to 2, which is in the South Assam that you said we'll share the details in the next quarter.
Yes, we'll definitely share it in next quarter. We're just in the middle of locking some things. We will share it after we've done that.
Okay, got it. Yeah, and on the 2,000 crore capex, that is for the new expansion. But on the ongoing WHRS 12 megawatt, how much we have already spent and how much is supposed to be spent this year?
Almost we have spent because total around is 150 crore. Okay, we have spent around 80 crore up to March itself, 78 to 80 crore, and 60 to 70 crore further requirement is there. This will be by October we need to spend.
Okay, got it. And in terms of the other expenses, that is particularly on the advertisement and everything for the Siliguri plant. So now the run rate, so this quarter in terms of the other expenses, which is 93 odd crore. So anything was specifically in terms of the extra that we have spent, which going forward can reduce, or this is the normal run rate if this is the volume that we want to achieve, this is the normal run rate that is needed?
I think we of course spent more than more this year. I mean this year FY22, mainly because our Siliguri plant was coming up and we wanted to promote the plant. However, we have now curbed our branding expenditure and advertisement expenditure, and I don't think even on an amount that this expenditure is going to be increasing going ahead. So we have marketed and we were successful. We have been able to make the dealer network that we wanted, and we are building upon the dealer network, so we don't need to spend that much on marketing going ahead to kind of take it to a stable place.
So roughly, if I just want to quantify, so in terms of the full year basis or maybe on the fourth quarter, how much was spent for this extra effort for Siliguri plant? So which may not be there. So just trying to understand how much reduction we can see.
I think that's fair enough. So I mean,
This quarter is around 12. We have spent around 12 crore.
No, so I think like if we talk about the year round, so we may have spent about, and these are very loose numbers. I have to of course check, but these are the numbers which are coming on top of my mind. So which is around 43 to 45 crores is what we spent on branding this year. But this year I meant FY22. And the going ahead, I don't think we're going to spend more than 32 to 33 crores. So there is a significant drop in the branding expenditure that we incurred this year, which we're not going to incur in the coming year.
Okay. Got it. That's it from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Raj Nahar from Milli Consultants and Investments. Please go ahead.
Yeah, please. Thank you. Just wanted to know on this Meghalaya clinker unit and also for grinding unit, are we going to get the income tax incentive or any this GST, IGST related incentive?
So I mean, for the Meghalaya plant, there are some incentives, but those are very small. So nothing very significant, but I think in the plants coming up in Assam, we do expect, good SGST benefits. So there are two grinding units coming up in Assam, and they both should be eligible for SGST benefit.
What are the limits? Is it the full cost, or it is for certain period, or how it's run?
I mean, these are in the current state policies in Assam. So it is, I think, valid for around 15 years, and it depends on the the capex and if you consider a large project or a mega project or a medium one. But I think it ranges from about 100 to 150% of the fixed investment that you make in the project.
Okay, two questions on the expansion side. Are you going to add a power plant, captive power plant for your clinker plant?
No, so we basically will have, of course, the WHRS plant coming up with the clinker plant. And we also, of course, are coming up with the WHRS for the current plant. We don't have any plans of coming up with a power plant because we already have about 43 plus 8. So we have about 50 megawatt power plant, in Meghalaya. So there's no need for more power plants there.
Okay. And the last question is about this grinding unit. Since in Assam, fly ash availability is almost zero. So will this be mostly the OPC, or you will bring the fly ash from Bihar or Bengal?
So sorry, which plant in Assam are you talking about?
The new grinding unit which you are setting up in Guwahati and also planning to set up in South Assam. So those plants will be operated on OPC, or you will bring the fly ash from Bihar or Bengal or somewhere?
Oh, so our idea was that, the grinding unit that we have in Lumshnong, we'll shift that to completely OPC, and we'll be operating the two grinding units that we come up with in Assam, through it will be PPC, and it will of course use fly ash. So the fly ash will be coming from rakes, from outside.
Okay. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Uttam Kumar Seemal from Axis Securities. Please go ahead.
Yes, sir. Thanks for giving opportunity again. Sir, my question pertains to volume growth guidance this year. Last year, we have grown our volume by 29%. So, any volume growth guidance for this year, FY23, if you can give?
I can tell you what we are targeting. And I hope that we are able to achieve it. I think the volume growth that we are targeting is of about, just a second, I will tell you in percentage. Is about 17%. So that is what we are targeting this year. We are trying to reach 4 million this year. So we have made about 3.4 million in FY22, and our target for this year is about 4 million.
Okay, sir. Okay, sir. That's all from my side. Thanks.
Thank you.
Thank you. We'll take a last question from the line of Akanksha Goel, a retail investor. Please go ahead.
Hello. Yeah, I just wanted to know that generally why is your raw material cost higher than the other cement players?
The raw material cost is higher because are you comparing it to other mainland players?
Yeah, the all India companies.
Yeah, so I think, of course, Northeast has its own, dynamics, right? Because fly ash and coal usually in Northeast needs to come from outside. And cement is, the raw material cost is mainly dependent on the fly ash cost and the clinker cost. And the clinker cost is dependent on the coal cost. So, if your coal and your, fly ash is, of course, more expensive, then your cost of production would be higher, right?
Okay, so do you have any clinker purchases included in those costs?
No, we have not purchased any clinker from outside. Little bit, I think, about 10,000 tons maybe, but not significantly.
Okay, yeah, thank you.
Thank you.
Thank you. So we have a question in queue. That's from Keshav Lahoti from HDFC Securities. Please go ahead.
I just have a small follow-up. So your clinker capacity as per initial presentation is 2.8 million ton. In the call you mentioned it is 2.6 will increase to 2.7.
Yeah, so on paper it is 2.8. But our experience in the past few years was that we can manufacture about 2.6. We have made some changes to kind of take it to 2.7 to 2.75. So I think that is what our capacity stands at. We are making some changes to kind of further, push our capacity upwards. But till now, I think the anticipation is that we can make about 2.7 to 2.75.
Okay, understood. That's it.
Thank you. Our next question is from the line of Tanay Shah from DAM Capital. Please go ahead.
Hello.
Hello. Yeah.
Mr. Shah, we're not able to hear you that well, so could you please switch to handset and speak?
Sure. Can you hear me now? Is it better?
Thank you.
Yeah. Thank you for the opportunity, sir. I just wanted to ask one follow-up question on the price hikes. So, what would be the price hikes taken YTD right now over the average Q4 price which we had? Thank you.
Okay. So you mean like the price hikes in the last 2 months, basically 1.5 months?
Yeah. Yeah, in the last 1.5 months over the average Q4 price which we had.
Okay. So, the prices have increased in West Bengal and Bihar by about 20 to 30 rupees since Q4.
Okay.
And in Northeast, they have increased by about 7 to 10 rupees since Q4.
Okay, sir. Okay.
Thank you.
Okay. Thank you, sir. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you, Inba. Tushar, before we conclude the call, I have one small question for you, since it's our first interaction with the investors also. Just wanted to ask you, being the next-gen promoter of Star Cement, what are the areas of improvements which you have identified, and what are your thoughts about taking Star Cement forward? Any color on that would be very helpful.
No, thank you so much. I think we do have, for this company our size, we are right now about 2.6 million tons clinker and 5.6 million tons cement. And what we have planned in the next 2 years, and then we do want to take our deadlines absolutely seriously, is that we are going to execute a 3 million ton clinker plant and a 4 million ton grinding unit. So we want to be about more than double our clinker capacity and almost double our cement capacity. So that is the aspiration that we have for the next 2 years, and we are looking at more opportunities in mainland to put up a clinker plant. So those will of course be evaluated while we are setting up these plants. So I think the aspiration is to be as large as we can, of course, and that's what we are heading towards. Thank you.
Okay. Thank you, Tushar. On behalf of Phillip Capital India Private Limited, we would like to thank the management Star Cement for the call, and also many thanks to the participants joining the call. Thank you, and thank you, Tushar. Thank you, Manoj sir. You may now conclude the call.
Thank you.
Thank you, Ji. Thanks.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.